Jet Airways lenders will take control over the airline. The board has agreed to a debt resolution plan which includes issuing equity shares to the creditors. Soumeet Sarkar is standing by with the details of the debt resolution plan approved by the board, or the lack of it. Soumeet, good morning.
Good morning.
What is it that we can understand? What is it that we make out of the limited data that is out?
So let's go through the announcement step by step. So if you see, yesterday the board has approved the resolution plan that was put up by the consortium of banks. Now, according to the consortium of banks, there's a funding gap of close to 8,500 crore in Jet Airways. And as the company is unable to repay its debt, the lenders have also agreed to convert debt into equity. Now they will be seeking shareholders' approval to issue nearly 11.4 crore equity shares to lenders at just 1 rupee. Now, why 1 rupee? Because of the RBI circular which says that lenders can convert that debt into equity at 1 rupee only when the company's book value per share is negative. And in Jet Airways case, the net worth is negative. That means that the book value per share is negative, and so they can convert this debt into equity at just 1 rupee. Now, so they will be now seeking shareholders' approval on Feb 21st to convert this debt into equity and to increase their authorized share capital. So what does this mean for the shareholders now? Firstly, if you see this funding gap of 8,500 crore rupees, now it actually means that largely the entire debt of Jet Airways is unserviceable, because if you remember, after the second quarter earnings, the company had said that the gross debt is close to 8,400 crore rupees. Now, this was not at all expected, because everyone knew that that the company needs fund and there is a funding gap in the company. But no one ever expected that the funding gap would be close to 8,500 crore rupees, making its entire debt unserviceable. So that's a new thing that has come in, which is also a kind of negative for the company. Secondly, because of this conversion of debt, there would be a significant dilution that will come in. Now, the issue of 11.4 crore equity shares will give lenders close to 50.1% stake in the company, while that of Naresh Goyal and Etihad stake will now come down to around 25.5% and 12%. Minority shareholders holding will come down to 12.5% from 25% currently. Now, this conversion at 1 rupee per share also represents that there is no value left in the company, which is actually not the case. So this is also a kind of negative, because it's not only diluting the shares but also giving a negative sign that the company has no value left currently. However, despite all this announcement that have come in, there's still a lot of clarity that is required on many parts. Firstly, if you see, the announcement only says that there's a funding gap and they'll be meeting this funding gap by debt restructuring, equity infusion and asset sale. Now, we all knew how they were planning to meet the funding gap, but what should have actually come out from this announcement was a clarity on the timelines and details of this plan, which is still not out. Secondly, if you see, the lenders will be issued close to 11.4 crore equity shares, but how much of the debt will be converted into equity, we still don't know that, and we have no clarity on that. At yesterday's market price, if you see, the value of this 11.4 crore equity shares is close to 2,600 crore rupees, but we still need clarity on how much of the debt will be converted into equity. And the third and the most important one, we still don't know how much fund and who will bring these funds that Jet Airways need to sustain this operation, because we know that Jet Airways is in desperate need of cash to sustain its operation, but we still don't know how much fund and who's going to bring this fund. So company has its conference calls today at 4 p.m. So let's see whether they answer these queries today in the conference call that will be there at 4 p.m.
Yeah, arguably the most important conference call for Jet Airways in a long time, because there's a huge gap between the quantum of money that Jet needs to service and repay debt and to meet up the obligations, and what this resolution plan or any other plan that Jet Airways announced thus far can bring. And we'll talk about that with Mark Martin in just moments from now. But Soumeet, while we are at it, the numbers as well, what did they look like?
Well, nothing great has actually come out from the numbers. Lower passenger growth and higher cost has actually led to losses in the third quarter also. Now, if you see, they have reported losses for the fourth consecutive quarter in the December ended quarter, and the losses were close to around 600 crore rupees. And this is despite the fact that its peers have managed to report profits in this quarter. Now, this is because of the company's high cost structure, which has also weighed on its core performance. Now, if you see the company's revenue minus cost per available seat kilometer, that represents the cost per unit performance, that has yet again remained negative in the third quarter of financial year 2019 at close to 0.8 rupees, and this is despite the various initiatives taken up by the company to reduce its cost. Now, this rise in cost is not only because of higher fuel prices, but if you also see the company's cost excluding fuel prices, that has also increased by 14% compared to last year to close to 3.43 rupees, which is not at all encouraging, because the company has been continuously saying that they have been taking efforts to reduce this part of their cost. However, on the positive side, if you see, the yields of the company did improve, but that was an industry-wide phenomena and not particular to Jet Airways only. But what should have more come out from the company side was a cost reduction part, which is still not out. Lastly, if you see this chart, you can clearly see where the pain point remains for Jet Airways. Now, the passenger growth in the international route declined by nearly 8%, but still their revenues were higher by nearly 7.5% on the international routes. But on the domestic front, the passenger growth declined by nearly 4.5%, and their revenues declined by nearly 7%. So the domestic operations continue to remain the bigger pain point for Jet Airways in the third quarter of financial year 2019 also.